if I open up this, I have a spreadsheet here that I created together with one of the teams in one of my small business classes all the way back in Cincinnati before I actually moved to start teaching here. Put this together, and it's a really good example of how things work. So every company, whether it's like a one-person small business or like Microsoft, they all have four basic types of financial statements. There's a statement of cash flows, which is basically just a list of every piece of money that went out and every piece of money that came in with a date, a description, a category, and amount. Okay. Those then get organized in what's called a general ledger. Okay. So all of the stuff that's on this list, one of the things I was always kind of bored with accounting. I was not an accounting guy like growing up or when I did my MBA, but I learned to appreciate it over the years because there's a certain Zen balance to accounting. There's actually a right answer in accounting, and most things in life there is not a right or wrong answer. It's some gray area in between. But there's a right and wrong answer in accounting. It's kind of like putting together a puzzle. So everything from this list of cash flows always has to go in two places in the general ledger. Okay? It goes in one place as a debit, and it goes in the other place as a credit. And it's a little bit counterintuitive. Like credit sounds like something good to most people, and debit sounds like debt, which is something bad. It's exactly the opposite in accounting. A debit means something is going into an account, and a credit means something is going out of an account. Make sense? Okay, so if we just use a couple examples here so you can see how the underlying principles work. This is very first day of 2014, and they were going to get an investment from this investor right here, John Q. Investor, $10,000. Okay, so that $10,000, he just like wrote him a check. Okay, so if we go over to general ledger, that they took that check and they put it in their bank account. So it goes in $10,000 of cash or investment into debit. Okay, but it's also got to be a credit somewhere. Okay, so in this case, capital stock, they didn't just give it for free, they gave it in exchange for 22% of the company. So 10,000 has to go under credit for capital stocks, so showing what they owe the investors in exchange for the investment they made. Make sense? So it goes here for the bank account, but it also goes in the other ledger for this is what we owe. Okay. Similar concept. So if we go down, so after they got there, so they also got a line. They basically, I'm going to change that to loan instead of line of credit. So they got a loan from the bank, $25,000. Okay. So here, they also put that 25,000 right in their bank account. Looking good. They got $35,000 to play around with now, but it's a loan. They got to pay it back. So under long-term debt, you got to put 25,000 here because you owe it to the bank. Okay, it's not capital stock because it wasn't an investment. It's actually long-term debt. And in general, long-term and short-term debt, anything that you have to pay within a year is considered short-term debt. Anything that you have to pay in longer than a year is considered long-term debt. And then accounts payable, let me just like give you the concept of this for a second. So let's say that they actually, so they went out and bought a cooktop and an oven. They're basically making a bakery. Okay. So they went out, they bought a cooktop and an oven, and it cost them $2,500. But let's say that they actually bought it on credit, they went into the shop, they signed a document saying, okay, I agree to pay within 30 days. Okay? So they didn't actually pay cash, they said, I will pay within 30 days. So that is gonna go in accounts payable as something they owe. And it's gonna go in long-term assets as something they own. They bought it. They have a cooktop now. It's worth $2,500, although as soon as you buy anything, like it starts to go down in value. So later on, we'll talk about depreciation a little bit, but basically they've got the cooktop. It's an asset. It goes here under debit, but they also have to say that they owe $2,500 because they haven't actually paid for it yet. Make sense? Okay. Now, a couple other examples. I'm going to do networking and baking supplies, and this should give you a pretty good idea. So basically, they went out and they bought all this stuff, and then they started sitting down with some partners and potential clients, and they had dinner, and they paid $100 for the dinner. Okay, so the $100 came out. Let's say they used a credit card too. So the $100 actually goes on the short-term debt because they have to pay it from the credit card. But like they just had dinner with people, and you can't really put the food in your stomach somewhere on the ledger. But basically, the idea was that they spent dinner with people and they started developing a relationship, which will eventually lead to somebody being a customer. So that was marketing. So basically, the place where it goes in as a debit is marketing costs. So anything that if it's marketing costs, if it's overhead, if it's compensation, if it's cost of goods sold, so materials, it goes into an expense account. If it's something that you bought and you're going to own for a while, it goes into an asset account. If somebody owes you and they haven't paid you yet, so they basically signed a contract and said, okay, I'm gonna hire your bakery for a $10,000 wedding later this year. I committed to it, but like I'm not gonna pay you until like I've seen the cake, So that's gonna go in accounts receivable. Because you have a contract, they said they're gonna pay you, they just haven't paid you yet. Okay, so that goes in here as 10,000. And it goes in to wedding revenue, because we said it's a wedding, as oh wait, yeah, that's right. We're gonna put it into wedding revenue as 10,000. The revenue accounts work a little bit backwards when it comes to debits and credits and the rest of it. But does this make sense? Like everything goes in two places. And this is what QuickBooks is doing behind the scenes whenever you're using QuickBooks or any other accounting software. So I want to make sure you guys understand the underlying process before we get into how to use QuickBooks. So every single time money goes in or money goes out, it has to be put in one of these. It has to be put in two of these boxes. It comes out of one box and it goes into another box. And the nice thing is QuickBooks will make a lot of that easy to do rather than a spreadsheet like this, but this is what's going on. Make sense? Okay, now, if I jump out of here and go to QuickBooks, and again, QuickBooks is just one of many accounting software practice. It's one of the most popular for small businesses, but there's plenty of other ones, and I'm not like playing favorites in what brand I recommend. It's just probably the most common one you're going to be asked to know how to use if you're working with small business. So QuickBooks Online. Like I said, the client will create an account. I already have one, so I'm going to use mine to show you how all this works. Let's go to the nonprofit. So let me go in here to. Okay. Oh, so it is in here. I just had to tell first which person I am. I had three different accounts, one for the not-for-profit, one for the for-profit, and one for my personal finances. So create the account, log in. Since this is a new machine, it's texting me to verify that I'm me. That. Okay, so once the client creates an account, gives you access to that account, you'll land on a page that looks like this. Okay. There's just a couple things that you really need to know how to do in QuickBooks for the purposes of this course. One of them is categorizing expenses. Okay, so if we go we go to bank transactions here. So you can connect all your bank accounts here. So you'll actually, this is my like Chase account for the nonprofit. This is the Visa card for the nonprofit. This is the small business like checking account with Valley Strong for the nonprofit. This is the small business loan account from Valley Strong. And whenever you have a credit union account, you usually have to have like a token savings account in order to open the rest of the accounts. So you can also see the token savings account in there. And this is something the client will do. The client will go in and like type their like login and validation information with each of the banks, and then it'll be connected here. And anytime you want to update transactions, you just have to click update right here. I did all this last night, so there may not be any new transactions, but we can see. And in order to link the accounts to begin with, if you're coaching the client, they have to basically click on link account and then manage connections, and then it'll give you all the different banks to choose from. And you can also actually upload accounts from a file. Like I have records from the past of, like I used to run everything from the nonprofit, the for-profit, and my personal finances all through my personal checking account. And like I understood what everything was, but that drove when I finally got an accountant, my accountant was like, this is crazy. You have to separate everything. So I did, and now in order to upload the historical numbers, I just took them all in a spreadsheet and uploaded them rather than having them connected to the personal checking account. So you can do it either way. Now you can see here, can't find account. One of the unfortunate things is that sometimes QuickBooks like whenever I log in with another machine or I log into another account, it forgets the old connection to the bank, and you have to update the connection. So let's see, it still says updating right now.
Lord.
So it will not let me. There we go. No, still not letting me update. Okay, so there's really not any new transactions since last night anyway. Let me show you one place where there are new transactions. So this is my small business loan. And whenever there's a new transaction that comes in, it'll show up under for review, okay? And there'll be a little number here that says, 8 or 25 or 156, however many transactions there are. And basically, the reason these aren't categorized yet is because these are the amount of principal that I pay back on the loan. And sometimes QuickBooks also gets confused because this was a transfer from one Valley Strong account to another, it is getting confused and it won't record it as owner's investment, which is what it should be. So every time I try and categorize these things, it just comes back with an error message. So I actually have my accountant fix that. But when you guys are doing this, you're going to go in and for every item here, you're going to categorize it. So you're going to click on category and you'll tell it. So this is a somewhat of a bad example because it's confused, the right information is not there. So let me go back to some things that are already categorized and show you what it will look like, okay? So first thing, you download the new transactions every day, every week, whenever, and you'll have them showing up under for review. So if I go back to the meaning checking account here, you'll see for review, nothing. I categorized all of them already. But if you go to categorized, here's all the transactions from the 2025 and back into 2024. You can see there's 6 pages worth here. These are all the transactions from the nonprofit. And if I categorize something wrong, I can always go back in here and change it. Okay, so if I just click on whichever one it is and I click undo, okay. Let me see if this one. Yeah, so if I click undo, that sends it back over to for review. See? So Gusto, 2053, that's actually like payroll, the part of payroll. Payroll was like 8,000, but that's one member of the payroll from the most recent payroll. So I call that cost of labor, okay? But if for some reason it was showing up incorrectly as advertising, or if it didn't have a category, I would go in to the account here and I would tell it which category it is. Make sense? And this is probably the most important time-consuming work that you'll do for the client in QuickBooks. You have to work with them at first to understand what transactions are for what. Once you sort of started to learn what they are, you can set up rules for the transactions. So let me go back to one that doesn't have a rule already. Oh yeah, rule apply. You can set up a rule and tell it, this is the Gusto rule. Anytime money goes out from this account and it has the word gusto in the description, categorize it as cost of labor. Make sense? I go back here, look at some of the other ones. Office supplies and software. Claude AI is like a personal attendant that takes notes for you, AI. My COO uses that, $20 a month for the software. So I haven't set up a rule for that yet, but I could set up a rule that says, okay, here, let me undo this and show you how to do it. I could go in here and open the transaction up. And I can create a rule. And I can call it Claude. And I can say, if the description contains Claude AI, categorize it as an office supplies and software. Save. And you can get really specific too. If I think I'm going to uncategorize something and then show you, even though the example is actually from my personal life. So if I move that back over for review again, this is actually this is our Microsoft Exchange server monthly bill. So that's also software. But if I have my accountant doing my personal finances, I'm a smoker. I don't recommend it. It's very unhealthy, but it's the way my life has developed. So if we go and open this, basically, I almost always get cigarettes at the gas station. I also get gas at the gas station. So whenever I get gas, it's usually between, let's say, $30 and $90. It's usually double figures, but less than 100. Whenever I buy cigarettes, it's like 150 for a carton. So you can actually put into the rule, let's just pretend for a second, cigarettes, money out, and so this is the wrong account because it's the not-for-profit, but if this were my personal account, it would be coming out from the checking. Description contains, Exxon or Chevron or whatever, and add a condition, amount greater than $100. So basically, the more you work on this, the less you have to deal with in the future. You can start automating how QuickBooks sets up all the categories of things by creating rules like this. So your job for the client, if you do this as a project in class, is they set up the account, they connect all the accounts for you. You go ahead and upload all the transactions. You give it your best shot to categorize things the way you think they should be categorized, because the client actually is not an accounting person either. And then you meet with them again and say, hey, did I get it right? And then you can set up some rules to solidify those things for the future. Make sense? Okay, that's basically the project. Not every project is going to have a pro forma component, but let me show you how the pro forma stuff works. So the last thing to show you before we move on to small business loan stuff is under dashboards here. This is another really nice thing to be able to use. So if you go to planner, under the dashboard section, this doesn't look good, money keeps going down. So if you look here, by the time the end of April gets here, I need to bring in some more grant money. Or close some more deals, or lay some people off. But anyway, if you go in, you can actually, like this, I know that I have $100 that comes in every month that I have to pay for Amazon Web Services. I know that I have to pay about $100 for the workers' comp and liability insurance each month. I've got different employees that I have to pay different numbers. This is actually a one-time charge that's for my accountant to do taxes for me. And you can always just go in and add an item, put whatever date it needs to be. Let's just say today, and we'll say, like, utility costs. That's gonna be something that occurs every month, So let's say the utilities for the office are about $150 a month. And it's repeating and it's money out. Don't forget the default is money in. So if you're recording expenses and you don't check that, it looks really good. And then you realize that you actually put all the expenses in as revenues. So make sure to check money out if it's an expense, and then you can say it repeats every month. And it either doesn't end, it ends on a certain date, it ends after so many occurrences. And you can say which day of the month it happens on. So we'll say that it normally happens on the 15th. Okay, and then you save it, then it's in there. Okay, if I just go ahead and not finish that, once you have all the pro forma plans in QuickBooks, then your accountant, the like entrepreneur, everybody can actually go in and see what are the financial projections going forward. When are you going to run out of money? Like, how much money are you going to make? Like, what's the return on investment going to be? So it's very useful tool as well. I have focused the project so far just on categorizing expenses and revenues to create financial statements, but I'm starting to teach this part as well because in some cases it's more useful for the clients. So once you've got them all in there, the one bad thing about QuickBooks Planner is like it just lists a whole bunch of things in a list. You can't see like, well, how many are like, what does it total up to in the month? You can see the chart, but you don't have a spreadsheet. So you can actually go in here as well, download reports, export to Excel, cash flow report. And I usually chop off this will tell you like how much is expected. This is how much came out or went in each month from the past and into the future for predictions. You can also, if you want, get rid of that. Oh, I gotta edit. You can also get rid of the monthly summaries. And this is what I find particularly useful. You can see going forward every single day, like what's coming in, what's coming out. And for my own calculations over the weekend, I just added a column for like what's the bank account balance today for each of the accounts. And then start subtracting. And if it gets to 0, I'm in trouble. So you can also basically export. You can put all the plans in to pro forma in QuickBooks, and then it's very easy for different people to work with it. And then if you want to put it into a spreadsheet or a graph or whatever, you just export it into Excel. Make sense? Okay. That is QuickBooks and accounting.